This podcast is brought to you with the kind support of Plutus Capital, a female-run investment management firm based in Evanston, Illinois, which works with clients on a wide variety of mandates such as custom diversity solutions, manager due diligence, diversified hedge fund to fund allocations, and advisory services.
Our next guest has seen asset management from many angles and sales from just as many. Let's hear his reflections on what has changed and is changing in the world of investment management, and the eternal truths, such as how we like to buy, that are likely to stay the same. I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Pat Lynch, who was founder, president, and CEO of Chicago Equity Partners, a Chicago-based asset manager for over 20 years. He now holds investment and strategic advisory roles within the investment industry and is on the board of directors of Loyola Business School, as well as the Ballmer Center for Social Justice. Welcome, Pat. Thanks for joining me today.
It's great to be with you, Aoife.
Great. Well, let's start by talking about your journey into the investment industry, going right back to where you grew up and what you did at college.
Sure. Well, college is really where it did start. I was at a liberal arts school, but a business major. And as I took all the classes, the ones that resonated with me the most were the investment classes. I did very well in them. I was very intrigued by them. And so that got me on a path towards investments.
And did you grow up in Chicago, in this area?
Yeah, Chicago resident my whole life. Went to school here and have worked here my whole life except for 2 months. Have traveled extensively, but Chicago has always been home.
And just going back to your career then post-college, so where did you enter the investment world? And would you say there were any surprising turns in there?
Sure. Well, my first job out of school was with the Federal Reserve Bank of Chicago. And Ethan, you would appreciate this. I was hired by a fine Irishman named Larry Corr, who I think his primary reason for hiring me was I was Irish. But I ended up being a trust and investment bank examiner. So I'd focus on the investment departments of banks. And that was a great way to come into the space because I got to understand from a macro level about how these businesses run, about regulations, controls, things, like that became very important to me later in my career. So it was a great foundation. My next big career move was to Continental Bank, which was, one of the largest banks in Chicago. And I ran the pension investment group there. So we would manage pension, like defined benefit pension plans, 401k plans, mostly for middle market companies. And Continental had a kind of training program and a credo called client-focused marketing. And that was, you don't go out there with a bag of products and say, do you want this one? Do you want this one? Do you want this one? You go out and you start saying, what are your problems? And then you think about how you can solve them. Some of them might come from your bag of tricks, and some of them you might help them source elsewhere. While I was there, a good example of that, bringing the investment side in, was we started what were called time horizon funds. And this was 1994. And, that was what's now very typical, 2020, 2030, 2040. But that product was born out of my experience with 401k participants and recognizing that it was very hard for them to make a good asset allocation decision after going to a 15-minute training with somebody in their break room. So we built that product. I was the portfolio manager for that product, did a roadshow, went all over the country. Alas, it was way too early in the market history. Today, those types of plans capture the bulk of 401k assets because of some changes in regulation, safe harbor, et cetera. But back then, they just were not as well received. And so that was one of my, I think, biggest innovations and biggest stumbles all at the same time. It was just too early. That client focus has, stuck with me through my whole career at Chicago Equity Partners. Most of the products we had were solutions we designed for specific clients. So in some cases, we'd be doing a large cap, a mandate, and they'd say, hey, can you do this in mid cap? So then we would do it in mid cap, and they'd say, hey, can you do it with more or less tracking error? And so that custom design strategy to address that specific client's need would become a product a couple years later when it has a track record and we can offer it more broadly, to the market.
Well, we're certainly going to come back to that idea of client-focused marketing just a little bit later when I ask you about your approach to working with clients. But let's just go back to Chicago first. So you've been in Chicago your whole career. The firm was called Chicago Equity Partners. What is it that you love about the city and that kept you there for your whole career?
This Irish theme is going to keep coming back, Ethan. But, my parents immigrated from Ireland. They came to Chicago. They met here, had 6 kids, and, everybody has grown up and, successful and contributing to society. And I think that that's the kind of place Chicago is. Back then it was a place for immigrants, mostly Western European immigrants. Today it's also a place for immigrants, some of them from, South America, some of them from Asia, as well as, the traditional mix of Western European people. As somebody that's traveled extensively for work, I've seen many, if not I wouldn't say all, but almost all of the big cities in the world. And I keep coming back to Chicago. Whenever I get back, I say, that was really cool, but I really like Chicago. We have everything that those types of cities have, but we also are not so big and we're not as congested as many of those places. So it's a very livable city in my experience. Chicago has had a tough couple of years, I would say. And, that has happened in the past and we've come back from it. And I'd also say I'm very involved in the civic community, and the business community is very involved in making Chicago successful. And we are all very all in on making Chicago, be as good as it always was.
That is definitely very notable about the city, the sense of civic pride. And it's wonderful to hear that that you're still committed to that. So it's great to hear that. So now just looking at, we talked a little bit about your client-focused marketing. Are there any core investment beliefs that you hold?
Yes. This is kind of right out of our old pitch book, but, I believe that fundamentals, drive security prices, be it stocks, bonds, alts, whatever it is, that there has to be some fundamental value there. And I also would say that I am value biased, not so much as like value strategies, but looking at relative price of things. Those approaches work over long periods of time if you stick with them, although it's very hard to stick with them, particularly more recently where, a lot of momentum strategies have worked so much better near term than value oriented strategies. But that's where, the discipline comes in, whether you're an allocator or a portfolio manager, sticking to your guns during difficult times is what you're getting paid for. And then when things change and revert, which they often do very quickly, you get paid for waiting.
And now getting back to how you sell investment products, you mentioned client focus and solutions based. What are your thoughts on how that selling process should go?
Yeah, well, I think it really should be, in an ideal situation, like in our business, we had a one-to-one relationship with a lot of our clients. So we would get in through a direct calling effort and get to know the client. And we would have our bag of products, but we really were not there to kind of just display everything that we have. We were there to understand what their issues were and then kind of come back, think about how we might be able to help them. And that was very successful for us over the years. And I think, you could think of the traditional client as one kind of demographic, and consultants were the same thing. If you say, here's what what are your issues? What are your clients' issues? Here's what we have, or we can design something to address those needs. I think that gives you a much better relationship, both with the client and the consultant, if you can do it that way. One of the challenges for the investment industry as a whole has been this kind of disintermediation of relationships where, like in the RIA channel, people may be using your products. They may or may not even know the name of your company. And you don't have a direct client relationship. Some of the OCIO platforms, it's the same way. You don't have a relationship with the end client. You have a relationship with the allocator. But I think, in its best sense, if you can have a direct relationship with the client, I think you can be, much more effective on behalf of the client.
And you mentioned the wave of disintermediation. How else do you think the landscape has changed? And do you think it will ever return to the type of direct selling approach that you endorse?
I think that the direct selling approach can still work if you have a differentiated product or strategy and, a willingness to work directly with clients. A lot of the larger plan sponsors do buy direct. So I think if you can focus your energies on that channel, you can still be successful with a direct approach. And, for the much broader market, and at least in numbers of opportunities, I think you have to view, the allocators, be they OCIOs or consulting firms, as your client, and, kind of get a Vulcan mind meld with them about how you can, help them help their clients.
So let's get back to your personal journey now. Have there been any setbacks or challenges or even investment mistakes in your career that you've learned lessons from?
Well, of course, yeah, there have been. I think you need to have a solid, well thought out investment process that you will follow, which is the road to success. I think it's too easy to blink in the face of adversity and kind of forget your process at exactly the wrong moment. So, having a well thought out investment process is something I believe will serve you well and help you and your clients, because the counter is when you get away from process, it's then how are you making decisions, and I've seen it happen. I wouldn't say at our firm, but I've seen it happen at other places. And it's a very difficult place to find yourself. On the career side, I believe you should also have a plan and take control of your future. I see a lot of people kind of drift from job to job, sometimes sideways. I think if you have a plan, when opportunities arise and get pitched to you, you can make better career choices if you know where you're trying to go and you can see how this next move would fit within, a longer term plan.
Certainly good, astute advice there. So you've been in the investment business now for your whole career. Would you recommend it to a young person today? What is it that you like about it?
Oh, that's a great question. I frequently get asked by clients and friends to kind of interview / have a conversation with their kids about getting into the investment business. And I would say 20 years ago, I would have been like unequivocally positive for pretty much anybody that I met. And I was positive because, it's a business where, it's intellectually stimulating. I'm buying a stock because I think it's too high. You're selling a stock. I'm buying a stock because I think it's going to go up. You're selling a stock because you think it's going to go down. And one of us is right and one of us is wrong, taking out friction type decisions. Every day you're in that constant, intellectual challenge, which I think is a great reason to be in the business. I think that, the other thing is it is a meritocracy, particularly at the macro level. The firms that are performing well and doing well get more assets. And then hopefully, if they have a meritocracy within their own firm, the people in the firm who are contributing the most do well. More recently, given this shift from active to passive, I think, there's going to be a decline in revenue at the aggregate level. It hasn't been as impactful as it could be because the markets keep going up. And so even, the active management, there's negative flows, it seems like every day. But when the market goes up every day, it kind of mitigates those negative flows. So I think that the primary reason, like that intellectual challenge, the rigor of, being in the battle every day, winning or losing, making good decisions on behalf of clients is still there. I also tell people that if you're doing it because you want to get rich, it's probably not going to be as lucrative as it used to be, but it could still be, plenty lucrative.
Yeah, I think you touched on an important thing about the evolution of the business, because certainly versus say 20 years ago, you're not making money in the same places perhaps today as you were then. You certainly have to be able to pivot, maybe to look at where the growth is, where the existential crisis is. How do you think it will continue to evolve over, say, the next 10 years?
I think that what's happened is not going to be undone. So the shift to active to passive is going to continue. I think we're probably in the 7th or 8th inning of that process because people started it, a number of years ago. I think that being closer to the client is a good thing. And I think that, there's going to be less people close to the client. And so I think the people who own the client relationship are going to change. Managers typically own the client relationship. Now I think, consultants and OCIOs, typically, or RIAs typically own the client relationship. That's something that's evolved. And I think that's only going to continue to evolve. I think some of the economics are going to come out of the industry, as I stated earlier. If X amount of the industry is passive, that's revenue that just disappears from the active manager's side. And I think that there may be a consolidation among boutique managers, a reduction, hopefully consolidation of boutique managers, because revenue is coming out of the system. And I don't think everybody has a cost structure that could live with, declines in revenue.
And I know at Chicago Equity Partners, you had a lot of senior women there. So it was quite a diverse firm. What are your thoughts on the diversity of the industry as a whole? Have you seen it as improving over the course of your career?
Well, it definitely is improving. When my career started, it was, a bunch of white males. That's kind of like a reality. What I have seen is that it really, the firm and our clients really benefit from having a diverse set of people in a room when you're making decisions. It's just clear, and I can give numerous examples of how that happened, for me and for our firm. I think the way to get there, though, is going to be, a little different than it's been in the past, or maybe an acceleration. I think education is key. Getting more people, if they're focused on investments or a number of other things, but getting a STEM education, getting people exposed to businesses. We participated in a program called the Cristo Rey program, ran by the Jesuits in Chicago. And we would have these underprivileged kids would get to go to a private high school for free. But what they would do then is they would come to work at our firm for a day or two a week. So, and then we would pay the school basically their tuition. And those kids were like sponges, just soaking up, like the mechanical things we do, like how we manage money. But they'd also be just saying, I never even knew this career existed. Like, I've never heard of this. I don't know what a mutual fund is. I've never been exposed to it. And some of the kids who've gone through that program have gone on to be in the investment industry or to be in other kind of professional industries that their parents, didn't know about. And I empathize with them because when my parents came over from Ireland, they didn't know anything about stocks and bonds or investments. And I had to kind of learn on my own. And I had some great, mentors. But I think that programs like that, and they need to be done on steroids. We need to be doing a lot of programs like that to get people exposed to the industry. And then I think firms have to take a deliberate approach to being diverse. And it's not like, we can't find anybody, which I've heard that throughout my career. Like, there's no, good candidates. It's like, and I can tell you the last 5 or 6 years, my answer always was the same. Well, keep looking. We're going to build our bench because it's good for our firm. It's good for our clients. And we're not going to accept anything less than what we set out to find.
That's actually, I think that's the other point about Chicago, because it is such a diverse city. There is a great number of projects, such as the Greenwood Project, just a number of groups who are acting with programs like you mentioned. So I suppose it is a great place, a crucible, I suppose, for this kind of important apprenticeship type work that you mentioned. So that's great to hear. So you mentioned you've had a very long career, and I'm sure you've worked with some great mentors. Were there any key people who you can mention who influenced you, or whether maybe not in your career, but just in life in general?
Yeah, well, I thought about a couple people. I mentioned earlier Larry Corr, who was my first boss when I was at the Fed. Larry was the best editor I've ever experienced. I would turn in a write-up that was 6 pages long, and I would get back a write-up that was 1 page long. So you learn to distill your thoughts, be very clear in your thinking, be very logical, and it helped me learn to write really well very early in my career, which has been helpful, and I think is a great thing for anybody to learn early in their career. And then Jim Miller, who I worked with at Continental Bank, and then we came over together to start Chicago Equity Partners, was a real thoughtful, pragmatic guy who was very fiercely loyal to his team. He was like a great role model for me. He's a brilliant investor and a great manager, but it was those bigger characteristics that I'd like to think I've emulated to a degree in my career because of him. And I've also been very fortunate to serve on a number of nonprofit boards. I've been on the board at Loyola University. I've chaired other boards. And, seeing how people in those spaces think has broadened my perspectives about, how to run a business and how to be a good person. Because, particularly academics, they approach the world very differently than business people. And Sometimes that's a little frustrating if you're trying to get things done as a business person on a board, but it also shows what, a lot of deliberation and thought can do to kind of get you to a better place. And, like at Loyola, we spent a lot of time thinking about, talking about, working on social justice issues. And that exposed me to a lot of things that didn't come up normally in my day-to-day life.
Along those lines, were there any key pieces of advice that you've received or any creed or motto that you live by now?
Yes. The best advice I received is probably from my dad long, long ago. And that's to treat people, be it clients or associates, colleagues, the way you would like to be treated. And, it's a very simple thing to say. I have amended it as my 5 boys have grown up and started working. And I often have said to people, treat people the way you'd want your kids to be treated. Because I also recognize maybe I have a different tolerance for behavior than somebody else might have. So I think that basic thing, if you can apply it across, be your work or your life, you'll do very well.
I want to tap another piece of your wisdom now, because I think you have certainly in a long career seen a lot of buyers, say in the form of clients, perhaps. You've got some wisdom about knowing how people buy. And you use the analogy of a car. Like, does someone want to look under the hood and examine everything? Or are they happy with the brand? Can you expand on that a little bit?
Yeah, I think that, again, it kind of goes back to the client-focused marketing I had mentioned earlier. And that is, we need to understand how the client is thinking and what the client needs versus what we need. And the car example that we've talked about in the past is, I will go out and buy a car, and if it's the right color and it's the right brand and they tell me it goes 0 to 60 in X seconds, it's like, that's enough for me. And then I know other people who want to buy a car and they need to open the hood. They need to read 50 reviews. They need to see, what kind of shocks it has and all this stuff. And they're equally valid buying behaviors. But if my client is a buyer like I am, I need to speak to him at that level. And I've seen too often salespeople go into the, what kind of tires it has and all these detail, and the buyer is lost. They're like, you lost me at 0 to 60. I didn't care. The last 10 minutes were for you. It wasn't for me. So I think you need to fashion your narrative to the audience. And that goes to level of sophistication as well. Some people are incredibly sophisticated about their business, not so much about investments. And I think some of the best communicators, and I worked with Trish Halper, who was a very good communicator, who could talk to, PhDs in statistics as well as to, firemen.
Well, we've had Trish on this podcast, and that is exactly true. She's a wonderful communicator. But in a role where you are trying to sell product ultimately to clients, you're going to get a lot of no's. How do you take the no's? And did that grow on you over time, the ability to take a no for an answer?
Well, I've always said no is the first step to yes. So unless you get a very firm no after a final, I think that, if you do your best and you represent your firm very well, represent the product very well. If it's ultimately a no, I always think that there's no for now. It's like what the French au revoir versus goodbye, right? It's like, we'll be back and we have multiple products. And if we have demonstrated, well in that relationship building process, there's always another opportunity. And I can tell you time after time, we've had yeses after nos.
Well, very good advice there. I couldn't let you go without asking you some of your tips for selling. So now, just looking back, my last question, if you were to look back to your younger self, was there any advice you would give that young man?
Yes. I have been fortunate to really enjoy what I do. I've worked with really smart, thoughtful people, but that was kind of lucky for me in a way. Like I kind of got into that and have worked with that group of people for over 20 years. So what I would tell myself, back then is find something you enjoy, find something that you're good at, and surround yourself with great people. And I'd also add, always remember to give back to the community. I think that's very important at many levels.
Well, thank you, Pat. It's been a real pleasure speaking with you today. You may not have seen it all, but you've seen a lot, I think, in your career. And thanks for sharing some of that wisdom. And the city of Chicago is lucky to have you as a pillar of their financial services community. So thank you for sharing your insights with us.
Thanks, Ethan. It's always great to be with you.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.